Oh, let's go, base. Let's go, boys. Where you at? Let's see. Choo. What's up, boys? Hey, what's up, everybody? Welcome to the first ever live stream on this channel. Stacking Sats. Stacking Sats. Mr. Zach Riggs in the house. Mr. Leonard. What up, Leonard? Let's stack them Sats. Let's go. Okay. Some of you, I've talked to you in person about this already, and or this conversation has come up, so I wanted to invite you to this show, and let's just talk about it. Let's talk about Bitcoin. Talk about what it is. So I have some stuff set up, so we can try to kind of work our way through it. I have a screen I can write on, and we're basically going to go through Bitcoin, why we should own it, and I guess what it is, right? What it is. So let's get into it. I see Leonard and I see Zach in the chat. Anybody else in here, please please comment, say hello, and if you have any questions at any point, drop it in the chat. I'll pick up on those, and I can tailor the conversation more specifically to your questions. Okay. So, welcome, first of all. If we don't know each other in the future watcher, I want to have this video in place so that when I have this conversation with the next person I have this conversation with, because I'm going to be having this conversation a lot, I want to be able to send people over to this video. And if you're here because of that, welcome. I couldn't tell you all this in person when we were talking, but I made a whole video about it so that I can share this information with you. There's no other shoe about to drop. I'm not going to pitch you anything. I'm not going to try to sell you anything. I'm not going to. This is not a selling thing. This is a knowledge share thing. I think everybody should know about crypto. Everybody should know about Bitcoin specifically. And so I'm making this content so that I can share. So what up, Newell? Let's go. Newell Garcia, welcome, dude. Thanks for the subscribe. Welcome, dude. I'll give you a minute to type in the chat if you need to. So basically this video is going to be the conversation that I would have with somebody that I love, a family member, a friend, to get him to understand the properties, the benefits of owning Bitcoin specifically. Okay, this is not a video for, like, I'm not a financial guy. I'm not giving you financial advice. I'm just trying to give you an education into what Bitcoin is, and what you choose to do from that point on. That's up to you, right? I just want to make you aware that Bitcoin exists, what it is, and the benefits of it. Okay, I'm not selling it to you. I'm not telling you to go buy some. I'm not telling you to go sell yours. Okay, I'm just gonna tell you what I do, what I'm doing, what my plan is, and if you have any questions, if you're also on the same journey trying to figure out crypto, trying to figure out Bitcoin specifically, that's what the whole point of this channel is. The channel is called Stacking Sats, because I guess we're gonna jump right into it, guys. We're gonna get right into it. So a sat is short for a Satoshi, and you're probably thinking, what the heck is a Satoshi? Let me tell you what a Satoshi is real quick. Okay, I'm gonna bring this page up, and we're gonna do this screen share thing. Let's see how it works. Bam! Let's go. Screen share. Okay, turn off the music. It's go time. Oops, there we go. There it goes. All right, so I'm trying this out. It's my first time doing some kind of presentation like this, so bear with me. Let me turn this camera up a little bit. Okay. Bitcoin for beginners is the topic of this video. I'm going to assume you guys don't know anything about Bitcoin. We're going to go from the beginning to the end. From the beginning, just so you guys understand what's happening, and then we will take it from there. Okay. So first, let's take this fancy graphic off of here. Bam. Bam. Okay. Starting from a fresh page. Okay. So let's talk about what a Satoshi is, so you can understand the name of this channel. Okay. So A dollar is a 1 with a period and 2 zeros. Okay. So you have $1. It's equal to 100. Ooh. Whoa, 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 whoa. Whoa, whoa, whoa. There it is. Come on. Be right. There you go. Cents. Okay. $1 is equal to 100 cents. Now, this is $1. USD. Okay. $1. A Bitcoin, BTC. So BTC is equivalent to USD, right? BTC is what USD is, okay? A Bitcoin is a 1 with 8 zeros after it. So 1, 2, 3, 4, 5, 6, 7. That one looked like a D. We'll be doing that one. 6, 7, 8. Okay, so that's 1, 2, 3, comma. 1, 2, 3, comma. So that's 100 million. So one. Bear with me, guys. This is kind of important. 2, 3. 1. Wait, I messed that up. Boom. Boom. I know, right? I know. I can't see the chat. I need to pop that out. Okay. So it's 100. It's 100 million. What would be called cents in the dollars? They're called satoshis when you're talking about Bitcoin. So SAT. Satoshis. So a dollar has 100 cents. A Bitcoin has 100 million satoshis. Okay. So just how you can just like you can spend a dollar, if you need to spend less than a dollar, you can spend cents. So it breaks down into 100 units. Bitcoin, you don't have to spend a whole Bitcoin. It breaks down into 100 million satoshis. Okay. So real quick, let me check if there's any questions so far. Bitcoin, let's go. What up, Salty? What up, Noel? Tano and Stella are listening. Oh, cool. All right, very cool. Thanks, Tano. Okay, so, okay, where was I? Where was I? Here. There it is. Bam. Brings up over here so I can see the chat. Pop out this chat. There it is. Okay, popped out the chat. I can see it over here. Cool. And then we're going to keep going. Bitcoin, dude, let's go. All right, we got this guy up here. Okay, and I got the shared screen. Good, there we go. Whoa. All right. And I can do my research over here on the side and just make sure I'm not misleading you guys. Okay, so that's where the name of the show came from. Basically, we're taking the word satoshis and we're talking about sats. It's a common phrase in the Bitcoin world to stack sats. Okay, we're stacking sats because the goal here is to accumulate as much Bitcoin as I can. Even though, because I might not necessarily be able to spend however much a Bitcoin is right now. It's like $29,000 or $30,000 for a single Bitcoin is about $30,000 right now. 28, 29. Depends. But the misconception that people get is that they think they have to buy a whole Bitcoin for 30 grand or whatever the Bitcoin price happens to be at the time. And that is not the case. You can start accumulating Bitcoin little by little, one sat at a time. And that's what we refer to as stacking sats. So that's the whole goal of my channel here. My goal is to get at least one Bitcoin before the end of the year. And let me tell you why. Okay, so now we're going to jump into the why. So why Bitcoin? What's a big deal? And if you have any questions at any point, guys, go ahead and put it in the chat. I see what you did. They're salty. Okay. If you have any questions, do put it in the chat. It's helpful. It'll help other people get a better understanding too. So please do put it in the chat if you have any questions. Let's see, move this out of the way here. Okay, cool. All right, so we've done that. We understand that so far. Let me erase this stuff. How do I erase? Clear canvas? Confirm. Oh, that's cool. That's cool. I'm using it's called Microsoft Whiteboard. It's pretty nice. Okay, so let's talk about what money is for. What money is. Okay, so money. Where is it here? Boom. Money. In the chat, what do you think? What is money? I was able to restore my Mac coin. Oh, nice, dude. Question: can you buy satoshis like you can get pennies, or is it satoshi literally just what you call a part of a Bitcoin? Yes, you can buy. It's an excellent question, Zach. You can buy satoshis like you would buy a penny. You can buy satoshis. The way they're listed, they're just listed as they're still listed as this BTC, and you'll be like 0.0020012345678. So that is 200,000 satoshis right there. 200,000 satoshis is the same thing as sats. 200. So that's about the same right there. That's the same actually. That's the same. It's just a way. It's just that if you move the decimal point, that's an ugly decimal point right there. If you move the decimal point, then you can refer to them as just sats. 200,000 sats. Okay. That'll come in handy later. But yeah, you're still buying Bitcoin, but you're buying a fraction of a Bitcoin. So you're buying 0.00 however many Bitcoin, right? And right now, all right, let's keep talking about this and we'll talk about that. Let's keep talking about the money thing first before we talk specifically into the Bitcoin. Okay. So why it matters. So money, what is money? Money is a placeholder for fishing gear. Yes. Money is a store of value. Okay, money is a store of value. Would you guys agree with that? If not, let me know in the chat. So money. We'll draw a bill right here. Okay. Some dude's face right there. Money. Money is some store of value, right? And you can also stack money here. You can also stack bills. Okay. Look at this big old stack of money right here. Money. Okay. And you trade your life force. And I'm going to get all philosophical here, guys. You trade. Man, I wonder if I can move this. Oh, I can move that. Oh, I can move the whole thing. Okay. Can't move that specifically. Oh, yeah, I can. Oh, I should have done something different. Okay, whatever. So money is yeah, you trade. Whoa. You trade your life, time, your money. So you trade your life force for money in your job, right? So you do your job. So we're gonna we're gonna draw something for what represents life. Represents life. I don't know. What'd you say life force? What'd you say life force? Life. You trade your life force for, you give up your life force for, we carry cash because gold is heavy. That's true. Money or cash is backed by gold though. Money money or cash is backed by gold, though. That's a good point. But is it? It hasn't been. I don't think cash has been backed by gold since Nixon took care of that. So, let's see. So we have life in exchange for cash. Okay, and when you do that, of course, there's always people in between taking their cut. You know, you still have to pay taxes on that. You pay taxes on that. So your life force is to be in exchange for cash or for money, for value. And then you take this value and you get it, and you get you pay taxes on it, of course. So you get just start with $100. Let's say, for the sake of this example, let's put 100 here. You worked for 20 minutes and you made $100. Let's say that. Just kidding. I don't know. You work for $100. Boom. Okay. Keep it simple. And automatically 30% of that goes to the government for taxes. Right? Would you agree? I think I have some gold in my mouth. Oh, nice. It's a savings account. Yeah, that's funny. It's funny. So you're left with about $70 after taxes. Oops. Then after that, you pay different things. You pay for different things. So you pay what does it say tax? So tax, income tax. And you get you have to pay taxes when you buy things, so like sales tax, so income. And I'm not trying to tell you guys to not pay income, to not pay your taxes. I'm just saying, just letting you know the truth, right? And sales tax, you pay sales tax all the time, right? When you spend that $70 you have left over after income tax, you pay sales tax, right? You pay a bunch of other stuff you pay a bunch of other things that you don't realize, right? So that's just those are some of the main ones. And let's just say you take whatever's left over. yeah, I know. I'm getting there. I'm getting there, Zach. Sorry if I'm kind of taking too long, but that's good. I need to get this presentation thing going and understand, get better at this, basically. Okay. So you got your $70, and let's just say you spend some of that. You don't spend any money. You just put that into your bank account. Right? You're gonna save that money. Right? You're gonna save that $70. You didn't spend any of it. You're saving it. Right? It's in savings. Right? That's one option, right? Another option you could do is you could put that $70 in like the stock market, right? To grow it, air quotes, or to hold it, retain value, right? So I'm just gonna put a little squiggle there. Stocks. I'm just gonna put stocks. That way it's easier. Stocks. Or what else can you do? You can put it in. You could buy a property, right? So property, real estate. Put RA. Okay, we'll put RA right here. Boom. What's another way you could invest that money to retain the value in it, right? Yeah, fishing gear. you buy really expensive fishing gear that doesn't ever depreciate. That's always going to be worth the same amount of money. Just kidding. All right. So the whole point here, guys, is that we have what's, obviously most of you guys know this already, but like just making sure you have what's known as as inflation, right? So even though you have your $70 in that account, and we're gonna make this a round number just to make it easier for us to visualize. Let's just say you got paid after taxes, you made $100. Okay, just to make it an even number. And this drawing thing is working out pretty good. It's pretty cool. and you take that $100, you put it into your savings, and and your bank is paying you like maybe 20 G's are up in value. Yeah. 20 grams are up in value. That's true. That's true. Oh yeah, that's another one. So let's say gold. Thanks. Gold or silver, right? Those are the ones. Okay, gold or silver. Perfect. Those are traditional ways that people try to retain the value for the money that they've worked with, or for the whatever money they have, right? You put it in your savings account, and your saving account is going to pay you, or like a long term, what is it called, a CD, right? And let's just say what's like the best rate that you've ever seen a savings account pay you? Like Capital One once upon a time did was close to 1%, and that was like a big deal. But most banks pay you less than 1% interest on the money you keep in your savings account, right? And you can also invest it. Ooh, that's a good one. That's a good one, Salty. You can also invest it in your health or education, a skill set. That's good. I like that one. That's very good. I got a couple of 20 G's in the package still. Nice. You can invest it into stocks, right? You can invest it into real estate. You can invest it into gold and silver. So let's do one at a time, and we'll see what the drawbacks are on these. Okay. So we put it into savings, and then we got to look at what's called inflation. Okay. I'm just going to call it inflation. Oh, I was going to say INF. Oh, come on. I need like an actual pencil or something. Inflation. Right now, it's, what is it? Let me look it up real quick. It came out last week. I think it was like 10 point. Is it May? What's March? March 2022. 8.5%. 8.5%. 8.5% is the inflation rate. The last time it was measured in March 2022. And with all the stuff that's happening in the economy, I'm not sure if it'll be down. Anytime soon. I don't know, but we got to go with the data we got to go with the current state of events, right? So you have your inflation rate of 8.5%, or just say that, and if your savings account is paying you 1%, you're still losing 7.5% of the value you saved in that of the value of the $100 you put in that account. Okay, so the way it works is in a year, you have to pay 8.5% more dollars for the same things than you did the year before. Okay, now even though the official consumer price index is 8.5%, it could be some things don't sell as often to be measured month to month. Like, how long does it take to sell a house compared to how long does it take to sell a gallon of milk, right? So the inflation rate that they measure is usually very conservative. So it's probably higher, right? Also, the way they come up with the inflation rate is also, it's not. I don't think it captures the real inflation, right? Like, if you look into your grocery bills, are you paying 8.5% more or less or more, right? More than that probably, right? So anyway, the point is that this savings shelter for your value that you're trying to store, the $100, is not worth it because you're actually still losing money, right? So in 5 years, at 8.5%, what is that? Bust out a calculator over here so I don't mislead anybody. what about 42% would be your. So let's just say 5 years. Where's my drawing pin? 5 years. Provided that the inflation stays the same, right? If they fix the inflation, it'll be different. But still, like right now, as it is, if inflation stays the same, in 5 years, it's 42.5%. So your $100 in 5 years to buy the same thing that you would need to buy the same item that costs $100 today, in 5 years, you'd have to pay close to $150, right? So like twice. Not twice, but like almost. This is going to be, no, actually more than that. What is that? Your maybe closer to $200, right? Because your money's worth a lot less. Your money's worth like what? 56 point something. Your money's worth a lot less than it is now, right? So that's with just inflation. And if over the 5 years you gained right here, so let me clear that. You gained 5%, right? Because 5 years you've been gaining at 1% each year. You gained 5%, but the whole economy lost 42%, right? On top of that, I hope I don't bum you guys out. On top of that, right? If you're not getting a salary bump in your work, that's at least covering that 8.5% year to year. Before you even get the $100, you're already losing. You're already losing more money than your starting point is already lower, right? The starting point, the value of it is already lower, right? Your life force that you're trading for that money is being devalued. And over the long run, right, over 10 years right here. Let's see, where is it? 10 years. Right? I mean, 85% of the value you've been saving is lost, is eaten away by inflation. Okay. And so you need to have places to store that value that can do better than 85% over 10 years, right? Or whatever. Let's say stocks have to perform very well to overcome that inflation, plus give you gains to overcome that loss of value that you're trying to prevent, right? Real estate is a good place to store value, of course, because a house is still a house, or a property is still a property, and the price of it keeps going up, but not because the property is worth more. It goes up because the money you're using to buy it is worth less. Does that make sense? So like the joy you feel when your house goes up in value, it shouldn't be that joy. You actually should be sad because it means it takes more dollars to buy that same house, right? It means that your all the rest of your money is worth less also. Okay. The reason that we have inflation is because the government can just print money whenever they need it. Okay. So whether you're a Republican or a Democrat, whether you want to spend money for whatever cause or whatever business or whatever to benefit whomever, they both end up printing more money. And in doing so, the value of your money goes down. Right. So, and that's where that's what this number represents right here. Inflation, 85%. So if you keep your money in an asset that they can make more of, then naturally when they make more of it, the value of your portion of that is less because now they have more of it. Right. So does everybody follow so far? I know it's kind of complicated, but that's kind of what we're doing. It's kind of how it goes. So questions, please. If you have any questions, we're also going to move on. Okay. What's the whole point of all this explanation? It's so that you can understand how Bitcoin fits into the equation. Okay. Okay. So money, so USD, we can use USD for all kinds of stuff, right? To buy things and stuff. Make sense? Okay, cool. Making sense so far? Okay, good. All right, so USD. If we have, if there's only $100 in the whole world that ever existed, and I give everybody in the stream $10. Well, first 10 people in the stream, $10, right? And then you all own like 1/10 of the whole. You all own 1/10. Oops, wait, too. 1/10 of the whole bag, right? 1/10 of the whole economy. So you're pretty well off, right? And then as the government, as they need more money to do other things, to pay people for other things, they just add another zero to that thing. And now instead of owning 1/10 of the whole economy, you own 1/100th, right? So you're but you don't actually get the 100th. You just keep your 10, and it's not worth less, right? Gotta sell the 20 grams, and exactly, you gotta pump up the price. You gotta pump up the price on those 20 gram jigs in order to really maintain the value, right? Okay, so that's good. We're gonna keep moving on. Okay, that's the kind of the properties of inflation. Okay, so now let's get into let's go back a little bit and talk about stocks. Right, stocks are great. They're gonna help you. Stocks are good when the stock market is rising, and but that growth comes at a cost, and the growth you're gonna get in stocks is not. There's other things to do with stocks that it's a good store of value. It's a good place to store value, I guess, but it's not as good as I think Bitcoin is, right? That's just my opinion. Yeah, those are gonna grow, but by putting your money into stocks, you're letting somebody else hold that value for you, right? Letting us, it's about custody, really. So when you buy a stock, or when you put your money in a savings account, if that bank goes out of business, yeah, you're FDIC insured for a certain amount, right? Or you have to depend on a third party, which is the bank, to let you access your money. You gotta go through their system. You gotta give up a bunch of information, personal information, to even have a bank account, right? You gotta be able, when they're open, not when you need your money, right? And with the exception of FDIC insured stuff, what happens if you have more than that in that account? It's kind of just lost, right? Okay, stocks, it's kind of the same thing. You gotta operate within the stock market, opening and close, right? To buy and sell. And you can't really buy or sell things with stocks, right? You can't use it as money. So you'd have to go actually sell it and cash it out, and then go through that institution's process of getting money in and out of the stock market, right? Pay taxes and all that good stuff. I mean, you should always pay taxes anyway. And it's a good place to put money there. If the stock prices are all going up, I think it's a good place to put money. But for me, I'm going with Bitcoin, and we're just gonna keep going with the conversation. Okay, so real estate is another really good place to put money in. But let's take real estate as an example. Okay, we'll start with real estate back down here, and then we'll come back to gold and silver. So we're gonna scroll down. So we'll just do the real estate section, and I'm just gonna making kind of talking from what I've been reading the past couple months. So RA, right? So real estate, you need a down payment, right? You need a down payment. If it's your first home, you could probably do like a 3%, right? If it's like a rental property you're trying to get, or second place or whatever, maybe you're talking like 20%, right? To even qualify for a loan or something, right? You need that down payment, right? And it's difficult to get into, right? If you haven't been saving up, right? Even 3% of a home, that's hyperinflated as far as like the value on it, it doesn't matter if it's hyperinflation. You still need to get that 3% to even get in the door. The way the real estate market is right now, it's you might even, there's people just going out and buying houses cash. So it's really hard to compete with those people, right? So it's really difficult to get into real estate, and part of the reason why it's so difficult to get into real estate is because of what we just talked about earlier up here, right? Let's take this example for the $100 over the 5 years. Where is it? Right here, right? 42.5% of the value you saved over 5 years is eaten away by inflation, right? And just to make it a round number, let's just say you save for 5 years thinking you have enough for a down payment for that 3%. And in reality, after 5 years, it's worth half of that. And you really only have, after 5 years of saving for that 3%, you only have 1.5% of that, right? 1.5% of the down payment you're going to need for the new price of that same building 5 years down the road because of inflation, right? Inflation goes up. It costs more money to get the same things, and you've been saving up that money for 5 years. And when you get there in 5 years, you realize you only have about 1.5% of the 3% down payment that you needed before. Now it's only worth about 1.5%, right? So it's very difficult for somebody that's starting out to get into real estate and save up, just because you're naturally bleeding so much money based on inflation, right? That's even if you got a, oops, oh, that's cool. That's even if you got a raise every year of 8.5 or whatever inflation is, right? If you got a raise every year for 5 years, 8.5%, you got to basically over 5 years, you got a 42% raise. And in 10 years, you doubled your salary, right? That would only make you just enough of the same, just keep it the same at the same level, right? So it's disheartening to me that you have so many people out there working very hard, working their hardest. Some people doing multiple jobs, multiple shifts, right? And they're in the monetary system that they don't even understand exactly how it's leeching them from their life force, right? It's terrible. It's messed up. And part of the reason why I wanted to do this whole series and this whole like channel and stuff, it's because I want people to just understand that, right? Is it even showing up on stream? Yeah, there it goes. So just understand that. Not because I want you guys to feel bad or sad or anything like that, but just to make you aware that it's happening and offer a solution for it, right? And again, I'm not selling you anything. I'm just informing you on this. And let's talk about what about gold? Okay. Oh, yeah. So let's keep here. Let's keep with real estate. That's just getting into the building, right? Once you get into the building and you air quotes own the property, right? You're never done paying for it. Even if you pay your loan 100% and you paid for however long your loan was, and you're done paying for the loan, you're free and clear. You still always have to pay property tax. And if you don't pay the property tax, they'll take the building or the property from you, and you're back to square one. It's never really yours. It's never really yours because don't pay the taxes on it. It's gone, right? And so it's good. It's a good asset to have because it's gonna while you're working, I guess, while you're able to pay those taxes on the building, the taxes on the place, you'll be able to keep it, and you can make loans against it because you can have equity in it and stuff, and that kind of helps retain a little bit of that value that you've been working for. But it's not perfect, right? It's still not it's still, you can still lose it. Someone can just come and take it from you, right? Like what about the people that bought real estate in like Russia and stuff, right? Like, all right, like I'm not saying like I did or anything like that, but like people that owned Russian property, right? And all of a sudden, like the war and stuff and all, and it could have been somebody that's like against the war, right? Or and nothing to do with like the political stuff, but it just happens that they live in Russia, right? They just happen to be Russian, and the government, or even the Russian money, right? The ruble, right? It just so happens that that money got devalued to nothing almost, right? Because of the war or whatever. And at no fault of that specific person, of that like Russian person, that Russian citizen, I guess you could say, right? So who's to say that something like that couldn't happen here, right? I mean, probably would never happen here, but you never know, right? So that value in real estate there is kind of it could go to zero, right? Same thing here, like eminent domain. There's a bunch of weird things here we have in the U.S. where like you could technically be kicked out of your property and they sell it off, or they pay you nothing for it. And but that's a whole nother can of worms, right? But let's just to say that real estate is not 100%, of course, right? There's ways that you can lose it, and you can be it can be taken from you, I guess you could say, right? But it's still better than a savings account, and better than maybe even stocks. I don't know. Yeah, I'm sure it's better than stocks if you're. Anyway, so let's just scroll back up here. Where's I here? So we are at real estate, yeah. And then so let's move on to silver, gold. Gold, believe it or not, does inflate. I think the inflation rate for gold is about 2%. Let me see. Inflation of gold price. Gold is heading higher inflation rate. Okay, let's see gold. So I'm trying to get an accurate number of inflation rate of gold. Let's see. Does gold do well? Does gold please? Okay. So I looked this up before too. It looks like the rate of inflation for gold is about 2%, right? Yep, about 2%. And so it means that it doesn't lose half of its value in 5 years. It just takes a lot longer, right? But in the long run, like over 30 years maybe. So let's do 2%. So 2%. So less than 30 years. What is 50? About 30 divided by 2. No, it would be, yeah, so at 2% in 30 years, gold will be worth about half. Oh, actually 60%, about 40%. It will lose 60% of its value in about 30 years. Right. So even gold and silver will, because there's gold being found, and there's even though there might not be very many like the rate of mining gold is not as quick as it is for the Fed to print more money. There's still what's known as like gold like derivatives and gold like certificates and that stuff. So like you could buy stock in a gold company and people kind of count it as gold, right? But you're basically not making any more gold. You're just making gold certificates, right? So that's how gold and silver would inflate. And at 2% over like 30, 40 years, the value that you have saved in gold or silver, because there's more being made or found or what is it called, or assets created derived from it, that value is still, you need more gold to get the same amount of value, right? So that's why gold would still not be as good as holding Bitcoin over the long term. Okay. All right. Also, storing gold, like you have to have a safe. You have to have it in your own place or wherever. Like I wouldn't have gold in my house. And it's really hard to move, right? It's really hard to secure, and you can't really transact in it, right? It's just like you have it and you own it, so it's worth something, right? It's hard to liquidate if you ever wanted to liquidate, which you probably shouldn't. Anyway, so it's just not very usable. It's like it's not inflation proof, and it is hard to move and hard to keep, right? Let me look at this chat real quick. Gotta sell. Okay, invest in helium. You can't produce it, and supply is only going down. Boom. That's so funny. Gotta sell. Oh yeah. Okay, good. Okay, cool. Right. So now we get to the big daddy, the Bitcoin, and why the way we look at it, it's gotta be, we look at it as like a digital property as opposed to a digital currency. Okay. Don't think of it. So, and here's why. So the theory behind it is that it's supposed to be like inflation proof, right? And recently it's been like trading with the stock market because we'll get into that later. But let's just talk about the theory first. So, very important number to know with when it comes to Bitcoin is 12 million. Okay, there's only ever going to be 12 million Bitcoin. There's only ever going to be 12 million Bitcoin. Most of Bitcoin has already been mined. There's still some to be mined, and that's a whole different video we can do. But for the most part, there's only ever going to be 12 million. There's never going to be more than 12 million Bitcoin. And this is one of the properties that makes it resistant to inflation. Okay, so since one Bitcoin is always going to be worth one Bitcoin, they're never. So if you have value stored in a Bitcoin, it basically takes that value out of the dollar system and into a. Oh, you know what else we forgot back here? Up here on top, we forgot like right here. We forgot like art, like precious art, one of a kind art, like the Mona Lisa or something, right? Or that's going to retain value, and over time, as inflation goes up, the artwork will still go up in price because it just means that it's still valuable, it's rare, it's scarce, right? So Bitcoin is that. Bitcoin is not art, but it's scarce. There's only ever going to be 12 million, no matter what, right? And at the beginning of Bitcoin, a lot of Bitcoin was lost because people didn't take it seriously. Thought it was just going to be no big deal. So there's actually less than 12 million Bitcoin circulating, right, or available. Nobody controls it, right? The way Bitcoin works, it's a network. It's a network of computers that are following a protocol, like an algorithm, more like a protocol, and that's based on like a basic rule set. And if you want to read the full rule set, let me bring it up real quick. Where is it? Let me find this guy real quick, guys. Give me a second. Whoa. All right, here we go. Let me just find this page real quick, guys. I have it up here so I can share it on the screen, but I don't know where I put it. There it is. Found it. Okay, let's get into the actual Bitcoin. Now that we have all the background information and all the problems that there are with the money system as it is, this is going to let us connect the dots as to why Bitcoin matters and what's the whole point. Okay, so starting, let's go, boom, there it is. Okay, you can go get this document and read it on your own if you need to. If you want to go refer to it at bitcoin.org/bitcoin.pdf. Okay, it's called a white paper. Okay, and in technical circles, a white paper is basically the definition of a project, an idea, and then from the white paper, you build out the infrastructure and you build out the actual technology. Okay, so Bitcoin, this is the original founding document made by this Satoshi Nakamoto. That's the person who came up with the idea of Bitcoin, and that's why the cents are called Satoshis. Okay, there you go, fun fact. But here's the abstract. Okay, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. The network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. The longest chain not only serves as a proof of the sequence of events witnessed, but proof that it came from the largest pool of CPU power. As long as a majority of CPU power is controlled by nodes that are not cooperating to attack the network, they'll generate the longest chain and outpace attackers. The network itself requires minimal structure. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will, accepting the longest proof of work chain as proof of what happened while they were gone. All right, that's a lot of stuff to digest. I'm going to do that real quick. Okay, help you guys understand that. So this is a deep dive kind of, guys. This is a really deep dive. To invest into Bitcoin, you don't need to know all this stuff, but you need to know what's going on here. Okay, so a node is another way of seeing a computer on a network. Okay, so we're gonna draw we'll draw some computers on the network. So here's a computer, 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 and these are all Bitcoin nodes, and they all have a copy of the ledger of like all the transactions that have happened on the Bitcoin network. Okay, so they got like a little ledger with all the transactions. Like Salty has this much, Salty's wallet has that much, and then that's got to match the ledger on this guy. So Salty's wallet's got that much, Zach's wallet's got that much, but it's not even your guys' names. It's just like wallet IDs, right? And all these have to match, right? These are all just like little ledgers, okay? Every node on the network has a copy of it, and they put this information. So say somebody wants to do a transaction over here. Somebody sends money. So Salty sends money to Zach. That transaction gets written into that block, right? And then that block gets sent out to all the other nodes in the chain, and it's written with the hash from the previous block, and then that makes it kind of like so that you can't change anything in this block without having to go back and change something on that block. So it makes a hash match here, right? And so eventually, as the chain grows, right, and it's got the previous one's hash, if this guy decides to do fraud on the network and say that his account's got like plus 100 Bitcoin, for example, right? Just an example. This hash right here won't match the previous one. And so all of these guys will see that block is fraudulent, and then they'll kind of X out that node and stay with the longest chain, because this basically shrinks the chain. Okay, so it's super complicated to kind of just do real quick on the thing, but like that's kind of like how the blockchain works within Bitcoin. Okay, and all other cryptocurrencies have adopted this kind of technology, with the exception of a few, and have come up with their own version of a coin, but it's not a Bitcoin. Those are all called altcoins. Okay, so the point of me telling you this is that these nodes don't have to trust each other. They don't have to trust the users, right? They just have to be aware of where the chain is, and whatever the longest chain is on this network, that's the chain they're all going to trust, right? This node could get shut off and then miss a bunch of transactions, right? And then it could get turned back on, and it goes and checks the chain. It says, okay, I see this chain here, and I see this chain here that this guy fraudulently put together. But it's short. This is the longest chain available. Then that's the one I'm going to trust. And then he's back in it, and now he's caught up, and then he can also write to the chain if he needs to, right? So this system makes it to where you don't need like a banking institution to be running servers to host a ledger of like transactions and all that stuff, right? It's all publicly available. Everybody can see it. These are just accounts on a system. You don't have to actually have your name associated with it, your address associated with it, any of that stuff, your phone number. It's just an account on your wallet, right? Okay, so that's how the transactions are running. That's how the system, or the Bitcoin network is how it functions, right? Okay, that's a lot of stuff, guys. Oops, sorry about that. Let's go back here. That's a ton of stuff. Let me see. I know there's got to be some questions in here. Just double check. Let's see. Boom, 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 boom. Nope. Where was it? Here. And restore chat. Pop out chat. There it is. Got it. All right. Chat. All right, nothing in chat. Okay, good. I'm just going to keep going. All right. So, the whole point of this whole presentation, guys, is just to help you guys understand that the benefits of Bitcoin. Okay, so let's go into it. So, Bitcoin, you can purchase a fraction of it. Okay, you're gonna think of it as digital real estate. Okay, you don't have to have a down payment on it. You can just buy a couple Satoshis at a time, right? And it's not gonna break the bank, right? Even if you don't believe in it, if you don't think it's a good idea, let me do this conversion real quick. Let's see, there it is, USD SAT. There it is, USD SATs. With all the stuff we talked about, the whole point of this whole video is something like this. Let's see if I get this to show up right. There we go. Okay. You're seeing this. Over the years, since 2011, the price of a Satoshi, right, has gone up relative to the dollar. So as the dollar devalues, a Satoshi or a fraction of a Bitcoin or Bitcoin itself has gone up in value, and so it's a better store of your wealth, right? 10 years ago, $1 would buy you 19 million Satoshis, right? Last year, or this year, whatever, last year, 1 year ago, $1 can buy you 2,574 Satoshis. Okay, so just that alone, right? And I know Bitcoin does go up and down in value over the years, blah blah, right? Let's bring this over here. See if this shows up here. Boom. That show up? Yeah. So this is Bitcoin, guys. It's gone up and down in value, of course. There's all this stuff where people jump in and out and they buy down here and they come up here and they sell and they make a lot of money, right? Or they buy here, because they get into it like when it's like super high, and then it drops in value, and they, instead of waiting for it to come back up, they freak out and sell it, right? And they lose that value. Like right now, we're at a point that Bitcoin is super low relative to where it's been. It's been all the way up to like 65,000, and it's down to 29 to 30,000, right? So just to go from, let's see, from here to where it was there, that's like 100% gains right there, right? And I'm just talking, and that's if you're like trading it and stuff. That's if you're like want to get into it and sell it, whatever. But what I'm banking on, what I'm going for is, put this back here, is preserving that wealth, preserving that value that you're working for, right? All this stuff, all this, you're working for that money, right? And it's going away with inflation. If you're going to save up, even if you're going to save up for 5 years for a down payment on a house or something, right? To me, it makes more sense to stack Satoshis, right? To save a little bit of money on the side, that money that you don't mind, because maybe this doesn't work out, right? Money that you don't mind losing, and you can't really say that you don't mind losing money, but it's because it's risky, right? It's still risky, but like if you had saved your money in Bitcoin as opposed to like your bank account, right? You would have been up, even though it's so volatile, even though it's been up and down over the years. If you can hold on to it, it's trending. It's going up, right? So especially right now, especially this day and age, especially right now, this time, we have a opportunity where people are thinking it might even go down to like 20 grand or like 19 grand. But the whole idea for this channel, the whole idea for what I'm trying to do is to stack as many of these as possible, get as close to one Bitcoin or maybe even more. Because in the future, I think Bitcoin is going to be worth a lot more than any other of these other places where you can store that value, right? Especially the way that the dollar's inflating right now. So if you're keeping your money in cash, keep your money in dollars. Even if you're keeping your money in a mattress somewhere, right? The whole thing where it's like, oh yeah, keep the money, keep your money in a mattress. Even that money's not safe, because the more they print, the less that money's worth, right? And this is proof right here, right? That's how. If the dollar was going up in value, then these numbers should be going higher. You should be able to buy more Satoshis with the same dollar, but instead, you're able to buy less Satoshis with that same dollar. Okay, so that's kind of like the big takeaway from this whole presentation, is that my goal here is going to be to, there you go, boom, to work on stacking Satoshis myself, right? And I'm going to be sharing the process with you guys, like the journey of understanding how to even get started. If that sounds like something you're interested in, let me know. Keep coming back. I'm not sure if I'll do a video. I'm not sure if I'll do a live every week. I'm probably gonna start doing videos instead, just explaining the different parts of it, like what is Bitcoin, not what is Bitcoin, but what is how do you buy a Bitcoin, how do you get a wallet, how do you set it up, all the basic stuff, that I would want my family members to know. But yeah, let me know if there's any questions at this point in the chat, guys. I know it was a long. That's already 8 o'clock. That's crazy. That was a long-winded one, and I haven't even opened my drink. So let me know if you have any questions, guys. Put it in the chat. If you didn't fall asleep, wake up. The benefits of holding Bitcoin over the long haul are going to be great, I think, because where were we? Here we go. In the long term, pop out this chat. Pop out. There it is. Oops. Oh, nice. Thanks, Zach. I didn't even know if you could hear it. In the long run, and not even that long of a run, dude. Like, it's already kind of possible. So you have all the benefits. You have a lot of benefits from holding a Bitcoin. So, you have the ability to transfer that value directly to another person, just from wallet to wallet. You can send somebody Bitcoin, send somebody fractions of a Bitcoin. The 10 woke me up. Nice. You can send somebody fractions of a Bitcoin without having anybody involved, without having the bank involved, without having a third party involved. There's no fee. I mean, there's a fee. There's a network fee, but not as much as you would pay like in some banks to do like a wire transfer, right? There is the issue of custody, right? You own that Bitcoin, and as long as you take that Bitcoin off of an exchange, you have possession of it. So if for whatever reason the bank that you're banking with goes out of business, or the stock of that company you own, that company goes bankrupt, you don't lose that value, right? If war breaks out in your country and you need to flee, just take your wallet with you. You take your Bitcoin wallet with you, and you have all your value there. It's not a you don't lose it, right? Every node on that network that I showed you earlier, every one of these nodes here, they know how much is in each wallet, because they all have a copy of the ledger. So if you lose your the record of your value, or your Bitcoin balance, doesn't get lost because one network goes offline, or because a country goes to war, right? You have that's with you. It's part of you, right? Another thing is, like, when you go off to heaven, that Bitcoin you can hand it to your kids. You can pass it on to your descendants, and nobody knows about it, right? It's just like it's an asset you can pass on that nobody's gonna take it from you. Nobody's gonna tax you on it when you pass it to somebody, right? Because it's all in the Bitcoin ecosystem, right? If you try to do that with the home, they're gonna get taxed on it. Any other kind of value, any kind of money, they're gonna get taxed on it, right? Plus, the best part of it, in my opinion, is as the more Bitcoin you build up, the more Satoshis you build up, you are creating your own asset that you can take loans against. Okay, so that's like that right there. That right there alone, kind of like, it's a little mind blowing. Okay. There's a finite amount of BTC where USD can be printed at any time, correct? But there are no regulations on cryptocurrency, leaving it's susceptible to more market manipulation than the traditional market. That's very true, Salty. That's very true. But if you're buying it and holding it for long term, right? Like my plan is, the market can get manipulated. That's fine. Like, I know over time the trend is up, right? It's like up 100% year to year, right? So even with the volatility, it's still trending up. So, and it's trending up at a higher percentage than any inflation, than any other asset is going to get, and then any other asset class is going to give you, right? So yeah. So what are you saying is that the future, that in the future of the USD will lose value due to inflation? You believe Bitcoin will gain value in the future? I believe Bitcoin will gain value, definitely in the future. And Salty has a great point where it says it's not He says it's not what is it? Not regulated. Okay, but so think of the there's so many things going to my head right now because these are great questions and great conversations to have. So let's look at the adoption curve of the internet, right? Like I'm old enough to know to remember when the internet came out, right? When the internet first got started, right? It was awesome, and so many opportunities came from that, and so many technologies were invented because of it, right? So many things like just look back and remember how the internet just changed everything, and how that internet got adopted so fast, right? Everybody, all of a sudden, it was like a lot of people had internet, and all of a sudden everybody had internet, and with it came all these crazy technologies, Uber, Facebook, all kinds of great companies like Amazon and Tesla and all that stuff, right? That's like think of Bitcoin right now as like the 90s of the internet, except for Bitcoin right now is getting adopted a lot faster than the internet even. Okay, does that make sense? So, but we're so early, like Salty said, that it's kind of unregulated, right? Like when we first got the internet, it was like, okay, we have the internet, and all kinds of stuff was on the internet, right? You can look up anything you can still look up anything on the internet, but it was more wild, right? It was more unregulated, right? But just because it was unregulated, that didn't make it where it's like, oh, it's unregulated, let's not use the internet, right? It doesn't make sense. It's because it's unregulated doesn't mean it's not good, right? It just means it's raw, right? Right. Okay. Yep. Short-term savings, house, kids, college fund, either go in for long-term. Yes. There you go. Yeah. There you go. Right, Salty. That's a good way to kind of look at it. So, and here's the kicker, Salty. And this is why I think your question is so good. The same reason why Salty is saying that it's like unregulated, or what's unregulated, which is the same reason why there's there hasn't been really huge mass adoption of like the real money, right? Of the real wealthy, like what's called a sovereign fund, like basically the money of a country, right? Or like the money of retirement plans and like wealth management firms, right? Where they have like tons and tons of money that they need to invest, and their investors are expecting them to beat at least the numbers of inflation, right? So if you have an asset, if you have one of those big companies that sees the benefit of Bitcoin as when it comes to like being a hedge against the inflation that they're seeing everywhere else, right? They see that a 30-year like bond is yielding them like 5%, if that, right? Or 3%, or I forget what it was. They're still losing out on inflation, right? Inflation's still, there's over 5 years, they're still losing 40%, right? 50%. So even a 30-year bond over 30 years, like it's not, you're losing money fast, right? So the only reason why these institutions don't get into it is because they don't have an understanding of how Bitcoin works, right? They don't have an understanding of the technology, really. And on top of that, you have all of these other coins that are also crypto, considered like cryptocurrency, right? That are not exactly crypto, not exactly like Bitcoin. They're different because they have like companies associated with them, and like a whole different type of thing, right? But they all get lumped together. So whenever any of those other coins like get hacked or something shitty happens, it taints the whole ecosystem, right? It taints the whole view of everything, right? So, but that's fine. It's okay for us. It's okay for us because it means that there's not that much adoption right now, right? And there's not that much real money, like the big money, getting into it yet because there's no regulations on it, right? But you have like countries like El Salvador that made it their national currency, right? That's like Bitcoin is El Salvador's national currency. You know why? Because they realized that they're, let's see, this is a whole different conversation, but let's talk about it a little bit. So they realized that Mac coin is just our coin. That's in the club. It's not worth any money. It's just for us to keep track of something, just so we learn the technology. That still holds, right? I'm not trying to like fleece you guys. If Mac coin was going to be an issue, it would be like, hey guys, I'm going to sell you guys Mac coin at $1 each, right? And I print a million of them, and then I sell them to you guys, and then you guys all buy the Bitcoin from me. Sorry, the Mac coin from me, and then I take off with your money, right? That's not what it is, right? But getting back to like when the real money comes in, right? Yeah, I get it. When the real money comes in, right? You have all of these all this big money that's waiting for Bitcoin to get regulated, and once it gets regulated, it kind of sanitizes it and makes it okay for them to start really putting in the big money in there, right? And that's when the real thing happens, guys. That's when you realize why we're stacking these sats is in preparation for when that moment happens. And I don't know I think it's gonna happen, right? Because El Salvador is using Bitcoin as a national currency now, right? And they're doing it because they realize that the money printers are pumping away, and what are you gonna do as a country? You make a product, right? I'm not saying El Salvador. Let's talk about another country. This is random country X. Okay, they make a product, right? And they spend man hours or whatever to make a something, and they're getting value from that thing by selling it to the United States, right? Or exporting it, and they're getting paid in dollars for that, right? And then they're holding on to those dollars because they need those dollars to do other things, right? It's like the U.S. really has an unfair advantage over every other country in the world because the U.S. dollar is considered, it's like the main form of currency. So the U.S. can always print more money, right? And in so doing, it devalues all of the coffers from other countries or other organizations or other institutions, just like they do our bank accounts, right? Every time the U.S. prints more money, that means there's more money available that means there's more money available in the market cap. So that means that you have a smaller portion of that money. Okay, so that goes the same for the individual person saving money in their bank account as it does for a country that's saving their sovereign wealth in the form of dollars, right? So when the interest rate goes up and we start printing more money, and all these people bail on their stocks and get back into cash or whatever, you're really like devaluing your it's devaluing the worth of all of these countries' work, right? It's not only just an individual. So are there whales who are manipulating Bitcoin by controlling it? Are there whales there is. Are there whales that are manipulating Bitcoin by controlling it? So the way you would manipulate, I guess, is by buying and selling in huge amounts relative to the current supply. Okay. Russia has big BTC farms running for quite some time. But so the whole, yeah, same thing with China. So the whole point is that there's going to be a lot more people interested in owning Bitcoin in the future, especially once we get regulation here in the US as well. Because so far, there was a big risk with Bitcoin because we weren't sure if like the US is going to ban it too, right? But recently they said like that they're not going to ban it in case they're not going to ban it, and on top of that they're doing they're trying to figure out how to regulate it so that more Americans can own Bitcoin, right? I think that's been the administration's position on it, and so the fear of it getting banned is kind of like, okay, it's kind of subsided, and on top of that, like you start to see other countries adopt it, and sure enough, it's gonna get to the point where once we get regulation, all this money that's been standing on the sidelines it's gonna be able to come in and actually buy Bitcoin now as part of their like portfolio of investments. And then once they start doing that, they're gonna realize that the money or the value that they've stored in Bitcoin is retaining or building relative to the other stuff in their portfolio. And then they're gonna start maybe putting more stuff in that, maybe putting more of that value into Bitcoin. And in so doing, there's still always going to be 12 million Bitcoin, right? Or less than 12 million Bitcoin. So there's no inflation here. What goes up? The price, right? The demand goes up. You can't make more of them. There's not going to be more Bitcoin. So then the price has to go up, right? Because it's going to take more money for you to give up your Bitcoin. Okay. And that said, we don't give up our Bitcoin, right? But my goal anyway is to stack sats and keep it forever, right? And give it to my kids, and then from there, they can give it to their kids, right? And so my plan is not like a 1 year thing, a 2 year thing. It's like a forever thing. Because as the value of that Bitcoin goes up, you can use it to take loans against it, basically, right? So say it goes to say it's $50,000. Say it's worth $50,000, right? And you own one Bitcoin, it's worth 50,000. Just as an example, even now, say it's worth 30,000. You have a whole coin, one Bitcoin. You can use that coin nowadays. Now there's even companies now that are doing like loans against Bitcoin. So and you don't have to give up custody of that Bitcoin. So you use your Bitcoin to leverage against a loan, and you get cash, you get USD because you have a Bitcoin as collateral, right? But you don't have to give up that Bitcoin in order to get that loan. And while you're paying back that loan with your normal job money, right? Your Bitcoin that's in your wallet is still appreciating, right? So you borrow money that's going to depreciate anyway against the value in your Bitcoin holdings, and you're still building wealth just by holding that Bitcoin relative to the US dollar, because the US dollar is depreciating, right? Because of inflation, right? Because they're printing more of it. So you take a loan against that Bitcoin, you pay that loan back or whatever, and you never sell your Bitcoin. Your Bitcoin's gonna keep going up in value, right? You pass that on to your kids, and your kids can also take loans against that down the road. They're gonna get a job. Their job's gonna pay whatever rate is, even if inflation goes up, they'll have a job hopefully that will pay a decent salary. And if they down the road, that same Bitcoin that you owned or Satoshis that you owned, however much you accumulated, will be worth a little bit more than when you owned it. And maybe it's enough for them to get a down on a house, or to maybe buy their house with a loan secured against the Bitcoin that you put together for them 10 years ago, 20 years ago, right? 20 years ago down the road, right? Or 20 years in the future. What do you think a Bitcoin is going to be worth in 10 years, right? I think a Bitcoin in 10 years might be worth, like, if we get regulation and all those institutions come in with all the real money, So who's to say it's not worth $1 million, right? And I know it's crazy. I probably sound like a maniac or talking about this here, but maybe I'll look back and be like, I was right, or dang, I was really wrong. But that's all right. It's a risk I'm willing to take at this point. It's a good opportunity, right? Like I would like think of all of the other things we missed out on when the internet first came out, and we're standing by not getting educated on it and ignoring it until it was too hard to ignore it because it was everywhere, right? Well, that's Bitcoin right now. Don't ignore it. Do a little bit of research on it. This hopefully is a good primer, a good conversation starter for you. Let's talk about this stuff, right? We can talk about it on stream or in person when we go fishing or whatever, or call me or text me. We'll talk about it. I love talking about this right now because I'm learning a lot. I'm learning a ton. And I do see it as a way for somebody that can't necessarily save for a house or save for something big. You can trade that Starbucks coffee every day you drink for some Satoshis, right? And that Starbucks coffee or whatever, and maybe it's not coffee, maybe that's fine, but just you can find $5 here and there to buy like $50 worth of Bitcoin every month, to buy $10 worth of Bitcoin every month, $10 worth of Satoshis every month, right? And little by little, you're stacking sats. And next thing you know, the big day comes when regulation comes and all of this big money gets into the Bitcoin. And guess what? Your little stacks of Satoshi that were worth kind of nothing, or maybe like you didn't think much of, all of a sudden they're up like a whole bunch %. And now you've positioned yourself to be able to maybe leverage your Satoshi stash against a loan for a house, right? That's crazy, right? Like without having to go through like a loan agent, without having to go through a whole like background check, a whole credit check. It doesn't matter if you would have the wealth or the value in Bitcoin saved up and you can prove it, then that's your collateral, right? That's like you're like that. You're in a better position than you were if you didn't buy that, if you weren't stacking Satoshis, right? And that's for us here, right? What about somebody in a different country? It's like third world country, right? Where their money is devaluing faster than the dollar, right? It's like think of like the Mexican peso, right? It's like you're a great citizen. You go to school, you get an education, you get a great job, you're doing great for the society, and you're getting paid in that peso. And guess what? In 5 years, your money is worth half, or maybe even 2.5 years, your money is worth half of what it is. And even though you went through and you did the right thing, you got a great education, you went and got a great job, a great paying job at the time, in 2.5 years, that job is paying you the equivalent of half of what you're getting paid because of inflation, because of hyperinflation, right? And so you'll never be able to own something. That's discouraging. You know, but what can you do? You're in that government system. You're in that government. You can't control financial policy, right? But what you can control is how many Satoshis you stack, right? So same thing. Now let's just think of once that idea catches on, and it's catching on in El Salvador, guys, it's catching on there. And there's a bunch of other countries that are seeing what's happening, right? You have your I guess your freedom, I guess you could say, right? Your freedom, your hope, right? That the value you're working so hard for, it's gonna you at least be able to retain it. If not, it gets multiplied based on the way that the current money system is failing. Just in the nature of it failing, the value that you put into the Bitcoin is gonna, even if it holds at that value, it's going to be worth more. But it's not even doing that; it's going up, right? So anyway, That's the whole premise of this whole show, of this whole channel. This is like the big intro video. And I hope you guys enjoyed it. I hope it kind of opened some eyes and motivated you to kind of look into it some more. I have a list of videos that I'm going to put into our... I might make a playlist of videos I would recommend you guys watch. And I'll do that. I'm going to make a video about what videos to watch. And I'll have a playlist with videos I recommend that'll kind of like give you a way better understanding of what I'm talking about. And yeah, it's a great thing, guys. Bitcoin is it's a very cool technology, dude. It's like the future of money. It is the future of money, I think. So I hope that you guys are in with it. A few years ago, 1 peso was worth 10 cents. 1 peso is currently worth 5 cents. A few years ago. Okay, so a few years ago, 1 peso was worth 10 cents. 1 peso is currently worth 0.5 cents. A few years ago. Yes. Yeah. And before that, like 20 years ago, maybe 20 years ago, 30 years ago, the economy crashed completely. So they had to do a whole, they reset it. And now it's devaluing again. So let's see. Yeah, exactly, Zach. By giving it to your kids, they can take loans against it for whatever they need to happen in life, right? So, and the whole thing is you gotta make them understand that it's not something that they sell, right? It would be, think of it as like owning. This is a good example. Think of it as like owning like a block in downtown San Diego, right? If you own a whole block, right, and you wanted to. And you basically, you would lease it out and build on it to all these companies that want to do business downtown, right? Same thing. You wouldn't sell that property to take money out of it. You would take loans against it, against the equity of it, right? And as the price of Bitcoin goes up, you could take money against that equity. I'm waiting for the day Roman hyperfixates on 3D printing and 3D modeling. Nice. I am a hyper fixator, Salty, and it's I'm just super excited about it, dude. It's so revolutionary. I want all my friends, I want everybody I know to know about it, regardless of your financial situation. Because I feel like we've been living in the Matrix, dude. Like I did everything I was supposed to do. I went to school, you know, I got an education, I got a job, right? And I'm getting a pay cut. I'm getting an 8.5% pay cut every year right now, right? And why? And you even know, but and on top of that, the money you're saving is they're taking it from under the mattress, dude, without even coming into your house, right? Like people that say like, oh yeah, I'll never put my money in the bank. It's a bunch of crooks. I'll just save it in a mattress or whatever, right? That whole like cliche thing. Even if you save it in a mattress, dude, you're still getting robbed. You're getting robbed. We're getting robbed, and we're not getting just robbed of like. That money represents your life force that you gave up. You spent your time, the limited resource you have, to do your job and do the right thing and get that money so you can help your family get and build it, eventually, hopefully build some kind of wealth for your family, right? In the future, you could be the guy in your lineage that started that wealth in your what do you call it? I guess in your lineage. Like, I'm sure glad that Uncle Salty or sorry, Grandpa Salty, great Grandpa Salty. I'm happy that Mom, how did our family get rich? Oh, and it's not about just getting rich. It's about how are we wealthy? How are we well off? How are we able to prosper, right? Because back in the day, great grandpa such and such, Grandpa Riggs, decided to spend a little bit of money on some sats, and like it's it's those kind of things, right? I don't know. I'm just super motivated on that, guys, and I'm super excited about it. And that's all I got for you guys. I hope you guys enjoyed this really long stream. And yeah, I can talk about this all day right now, guys. I'm super pumped on it. But all right, if you guys have any questions, hit me up and let me know. I'm gonna do some videos later on about setting up wallets and that kind of stuff. I'll probably just share some videos. 3D print a nitro, but what? 3D print jet drive kayak? It's possible. Ooh. Do you know that hyperfixation is a sign of higher level? Oh, interesting. Interesting. That's thanks for the save, Riggs. Thanks for the save, Zach. But yeah, guys. So I'm gonna continue to learn more about this, and I'm gonna just continue to share what I'm learning. I love the questions that Salty's putting up here. I love any opposition, that kind of stuff. I want to hear it. I want to hear it because I need to understand. If I can't answer those questions, then there's something wrong. I need to understand that. I need to understand and be able to defend the points and not necessarily to argue, but maybe you have a valid point and I'm looking at it wrong, right? I don't want to be, I can be wrong too, right? So I'm okay with being wrong, guys. I'm okay with being wrong. I just want to understand. And right now, from everything I've done research on, and as I'm at this point, as I see it, this is the way so far. This is the way to start building generational wealth. Is what I would call it. Generational wealth. Cool. All right, guys. Well, I hope you guys enjoyed the show, and I will talk to you guys soon. I'm not sure if I'm doing one next week. Maybe we'll. This is a huge topic. Maybe we'll just do specific things each week, like how to buy a Bitcoin. Now next week we could do how to buy a Bitcoin, and next week let's do how to buy a Bitcoin, and I'll walk you through the process of setting up your account, buying a Bitcoin, and getting it off of an exchange. Okay, and I'll explain why you should have your Bitcoin off of an exchange. Because you want to be the one that's the custodian of your coins. Okay. Okay. Awesome. Thanks, Zach. Thanks, Leonard. Thanks, Salty. Thanks for jumping in here, guys. I appreciate you guys jumping on. I will talk to you guys soon. See you guys tomorrow. See you guys Wednesday on Fish Hour. You have a good night. Later, guys. Oh yeah, I'm trying to work on a sign off, guys. I want you guys to help me finish it. I want to say, all right, have a good night, and remember. Stack sats, not what? What rhymes with sats? That would be a cool ending catchphrase. Stack sats, not blank. Buy one BTC first. Start with 32,000. Damn. Salty, I'm building up to it, dude. That's my goal for the year is to get one BTC. That's my my mission right now is to be a whole coiner. It's called a whole coiner. So. If you see the vision, if you see if you've opened your eyes a little bit to the benefits of Bitcoin there, cats, stack sats, not cats. Yeah, that's funny. Stack sats, not hats. Oh, I like that. Financial. Oh, that's a good one. Stack sats, not tats. Let's go. Okay. That's good. I like those. All right. I'm trying to find a way that rhymes with something that rhymes with sats. That's financial. That's boat money right there. That's right. That's boat money right there. So that's you can get your boat instead of selling your Bitcoin to buy your boat. You can use your Bitcoin to back your loan on the boat, right? And then your son down the road can use that same Bitcoin to back the loan for his boat, his new boat, and then his son's son can take that Bitcoin and back the loan for his boat, and there it goes on, and that coin will continue to go up in value, right? Rats. Oh, stack sats, not rats. Stack sats, not brats. Stack sats, not gats. Well, rats is so funny. Tats is good too. Tats, hats, okay. Bats. Anyway, we'll figure it out. But that'll be the sign off. All right, boys. Until next time, stack sats, not gats. Later.